έρθει.
Δεν ακούσα κάτι, νομίζω ότι θα το κάνουν κανονικά.
Έτσι να χάσεις το λεπτό.
Εγώ και ο Τάσος.
Τι μάθημα είχες?
Ως τώρα, δεν είδα κανένα άλλο. Strategic management. Εντάξει.
Εντάξει, ένα μάθημα.
Ένα μάθημα είναι, γιατί τούτο είναι...
Μπορεί να μην είναι προς 3 ώρες του.
Όχι,
ο
τα παραπάνω.
πρώτος είναι καμπινός.
Ο πρώτος είναι κανονικός.
Φαντάζομαι.
Τώρα το δούμε, τώρα το δούμε. Όχι ρε, νομίζω που είδα πριν, δεν είχε κάποιον μες στο ranking που να έχει πάρα.
Μπορούμε να δούμε τα tricks.
Ναι, ναι, μπορούμε να δούμε πόσα τρεις έκαμε ο καθένας τώρα. Στο γενικό πρέπει να κάνουμε να αναπτύξουμε τη δουλειά και να κάνουμε ό,τι εβδομάδα μπορούμε. Όντως. Βασικά μετά που μπήκα εγώ ήταν καλά. Δεν ξέρω αν από την είδα. Ναι, αλλά μιλάς για τον καιρό που ήταν το 20 το μάθημα. Και τώρα μετά που μπήκα και είχα την ώρα να είναι trades έκαναν. Εμείς έχουμε 2 trades. Έχει άλλο νομίζω να έχει. Και ο πρώτος έχει 10. Λογικά ρε φίλε, έχει 5, ξέρουμε εγώ δεν μπορούμε να κάνουμε αυτό. Έχει εντάξει ότι έχει περίπου 300.000 συμμετοχές. Εμείς δεν μας πάει καλά, διότι μας σκεφτείς είμαστε στους καλούς, αλλά έχουμε ο Ανδρέας. Ακόμα Ανδρέας. Ο Ανδρέας όλα.
If you don't mind, of course.
Yes. Otherwise,
Every time when I come to event like that,
Yeah.
whether it's English or Greek,
well, it's very good. It's considerable disadvantage, I would say.
from time to time when I see that this is Greek, well, okay, but when you've come, you've spent your time, wait, no, it would look like,
Yeah.
so not really. Still keep on saying without understanding of what is going on. And from time to time, I don't know whether it's Greek or not, but major people do not like me. But I always ask them, so can't you help me just figure out what is going on around?
Okay.
I was in Zurich many times, around 3 or 4 years.
Which company?
For the company, I was Russian ambassador
Good afternoon, everybody. Your Excellency, Ambassador of Switzerland, other distinguished guests, Member of Parliament, dear friends from the Cyprus-Swiss Business Circle, dear guests, students, it is with great pleasure that I welcome you to this evening's event, which is jointly organized by the Faculty of Economics and Management at the University of Cyprus and the Cyprus-Swiss Business Circle. Today's event centers on a topic that could not possibly have been more timely: global economic outlook, geopolitics, and how to invest in an uncertain environment. I cannot confirm any rumors that there was coordination with the White House about the timing of the announcement of the tariffs yesterday. Our speaker today is Dr. Themis Themistocleous, who's head of the Europe, Middle East, and Africa Investment Office at UBS Wealth Management. Kyriakos will do the introduction later, so I won't say any more about our speaker. Just that we are very pleased to have him with us and to talk to us about this very important topic. You can see, I think, the topics on up on the screen. These are issues that are very timely. This is what everybody is talking about today, about the new tariffs that were just announced. And then, of course, the big question is how everybody will respond to this: Europe, China, other countries. And we will try and make some sense of it all tonight. At the University of Cyprus, we take pride in fostering discussions that connect academic knowledge with real-world issues. Today's event is a testament to our commitment to engaging with pressing global concerns and bridging the gap between theory and practice. So, on behalf of the faculty, I would like to express our sincere appreciation to the Cyprus-Swiss Business Circle for their collaboration, which goes back a few years now. It started off as an initiative of our MBA program and evolved into a partnership with the faculty. We have had several excellent events, and we are looking forward to continuing and strengthening this collaboration into the future. I would also like to thank Ambassador Christoph Bergener, who has been a very enthusiastic supporter of this series of events and of cooperation between Cyprus and Switzerland in general. The ambassador is a very lucky man. He has the best job in the best country. And if you don't know what this refers to, check his LinkedIn profile. So thank you also, Dr. Themistocleous, for being here. We're all looking forward to an enriching and thought-provoking event. I now invite Ambassador Bergener to the podium for his address.
Ladies and gentlemen, welcome to this evening. Welcome to the guest speaker, Dr. Themis Themistocleous. We are very privileged to have you here. Thank you very much, Professor Sophronis Kleridis, Dean of the Department of Economics and Management, and for hosting this event here. Thank you very much, Kyriakos Metaxas. He's the chair of the Cyprus-Swiss Business Circle, and he made this event happen. Thank you very much. Dear members of parliament, dear ambassador, ladies and gentlemen, it's dear ambassador as well. Welcome to tonight's event. We are really privileged to have a top shot tonight here in Cyprus. When we compare Switzerland to Cyprus, okay, we have the same tourist attractions, we are a tourist countries and so on, but as well a very important factor, of course, is that we have important financial centers. We had some shady past in Cyprus and in Switzerland, but now we really are consolidated as financial centers with a high reputation worldwide. And we have as well in common that we have, for example, Cyprus top bankers in Swiss banks, like Dr. Themis, but we also had a top Swiss banker here in Cyprus. You remember probably in the year 2014 when Mr. Ackermann was leading a very prominent Swiss bank here. Now, I'm really glad to have Dr. Themis here because he's a courageous man. I think in times like these, to make an economic outlook, you really need a top banker. And I really thank you very much that you are joining this event, and thank you very much for this talk. I don't understand much of stock market. I just share one stock wisdom with you. If you want to make a small fortune, you have to invest a big one. That's what I've learned from a Swiss banker. So I don't know if you have better advice today. Thank you very much for being here. And thank you very much, Kyriakos. It's great, a great event. Thank you so much. And I give you the floor. You will introduce the banker. And I would like to say that it's the 3rd anniversary today of this Cyprus-Swiss Business Circle. And it couldn't be a better event like that. Thank you very much, Kyriakos.
Excellencies, ladies and gentlemen, distinguished guests, it is my great pleasure to welcome you all today to this special event co-organized by the Cyprus-Swiss Business Circle and the Faculty of Economics and Management at the University of Cyprus, with the kind support of the Embassy of Switzerland. We are gathered here for a thought-provoking speech titled Global Economic Outlook, Geopolitics, and how to invest in an uncertain environment, a topic that resonates deeply in today's rapidly shifting global landscape. Most of you know me, I'm Kyriakos Metaxas, and I have the honor of serving as the chairman of the Cyprus-Swiss Business Circle. In parallel, I've had the privilege of running my IT company, Metaxas CompuPlanet, for over 25 years. Today's event also marks a very special occasion, the 3rd anniversary of the Cyprus-Swiss Business Circle. Over the past 3 years, we've grown into a dynamic platform connecting professionals, fostering partnerships, and strengthening business ties between Cyprus and Switzerland. I would like to take a moment to express my sincere appreciation to all of you who have supported our vision along the way. A heartfelt thank you to the UBS executives who have traveled from Switzerland to be with us today. It's an honor to host you here. I would also like to express my gratitude to Dr. Sofronis Kliridis, Dean of the Faculty of Economics and Management, for his ongoing support and collaboration in co-organizing many successful events like this one. A special thanks to Ambassador of Switzerland to Cyprus, Christoph Berkener, for his unwavering support to our initiatives. I would also like to acknowledge and thank our generous sponsors, Vasos Iliadis and SureFood. Now it is my distinct honor to introduce our guest speaker this evening. Dr. Themis Themistocleous is the head of the EMEA Investment Office at UBS Wealth Management. He leads a team that covers EMEA markets, including credit, equities, FX, and economics, and also sits on the Global Investment Committee, which formulates the investment views for UBS Wealth Management clients globally. Dr. Themistocleous joined UBS Wealth Management in 2014, following an impressive 2-decade career at UBS Investment Bank, where he spent 15 years as an award-winning equity analyst. He holds a PhD in chemistry and an MBA. We are truly privileged to have him here with us today to share his insights on global markets and how to navigate the uncertainties of our time. Please join me in welcoming to the stage Dr. Themis Themistocleous.
Good evening, everybody. I have to say it's quite a change having to be introduced by a Greek-speaking colleague or friend. You can imagine the fun I have when my colleagues, non-English-speaking colleagues, try to pronounce my name. A lot of fun, interesting. But anyway, it's been a pleasure. It's really a pleasure to be here tonight. The agenda we sent a few weeks ago, right? So it's becoming more and more relevant after especially what happened last night. And I'm sure there will be a lot of discussion about tariffs and what does it mean, and in some ways what we know and what we don't know yet, because there's still a lot of things we don't know. But before we zoom into that, and I think His Excellency the Ambassador said, trying to predict the future with this uncertainty is challenging. But sometimes the trick to it is to pull yourself out of it before you zoom in. And to do that, what I would do is go back to just before the US elections last year. At that time, the US economy was growing at close to 3%. Trend growth for the US is about 2%. So everybody was surprised how strongly the US economy was growing. And then we had the US elections, and the market got even more excited. Because if you remember, Mr. Trump campaigned on 4 premises: tariffs, immigration, tax cuts, and deregulation. The market focused on the last 2: deregulation, tax cuts, good for the economy. Tariffs, doesn't matter for the US, it's all problems for everybody else, how they will change, and we'll come back to that. But it's also important to think about the sequence of events, because when Mr. Trump was elected the first time, he went first with the positives. He went with deregulation, he went with the tax cuts, and then he introduced tariffs. So already the economy was doing well. So, and by the way, the tariffs he introduced were marginal relative to what he's talking about now. And that's why when people trying to compare what's happening now and what happened in the first term, it's a completely different story. But we also need to remember the sequence of the events, and I'll come back to that when I talk about the markets. So we had the announcement last night. So what did we learn, and how does it compare to what we expected? So bottom line, what we heard last night is worse than what we expected, what the market was expecting. And you can see it by the market reaction today in equities, in bonds, in currencies, in oil, even gold got affected. So clearly, that was not in the price. That was not in the expectations. So what did we learn last night? Blanket 10% tariff for everybody, and on top of that, you got reciprocal tariffs. Europe, 20%, Switzerland, 31%, India, China, 36%, so 34%. So there's a lot of numbers flowing around. The first thing I want to say is that we don't actually know exactly what those numbers mean, because when they announced those tariffs, they made a lot of exclusions. For example, pharmaceuticals. Switzerland is a big exporter for pharmaceuticals. That's not included in that 31% tax headline that they announced. It doesn't mean they're not going to be taxation on pharma products. They just will come back to it at a later stage. The same with chips, the same with lumber, the same with a couple of other products. So the reality is we don't know. But what we do know, there's a couple of things. First of all, the 10% blanket taxation, if you think about it, if it's applied to everybody, that means every export into the US is going to be taxed. For that, it means that there's no differentiation. If you tax countries in a different, some of them zero, some of them more, you create a competitive dynamic within the US market, and potentially you could get prices down. If you apply the same to everybody, it's more of a chance that prices go up. And by the way, tariffs is a tax. It's a tax on companies, and it's a tax on the consumers. And the split between the two depends on the pricing power that companies have. Just to give you an example, auto tariffs. Some companies produce in the US, so they will be producing, they won't be impacted. Some of them, they export to the US. And what we heard subsequent to the announcement is that Mercedes said, you know what, we're no longer going to export small cars, the cheaper part of the range, into the US. Because if the low-cost part of the range, if they were to absorb that tariff, that means they will be making losses on that product range. To pass the price increase to their consumers, very difficult, right? Because people that will be buying that, they don't have the money. But on the other side of the spectrum, Ferrari just announced price increases. Why? I suspect the people that buy the Ferraris, they don't mind if they pay a little bit more for the brand. So you can see the difference. Where is the pain going to be absorbed? Some of it by the US consumer, some of it by the companies. So that's a 10%, and then you got all the incremental taxes. In our view, these other reciprocal tariffs, 20, 30, in some cases up to 97% for Laos and a couple of other countries, this is a starting point. I do believe that at some stage, those tariffs will be negotiated down for a variety of concessions from the countries that are on the receiving end. But the problem we have is, have we seen the worst yet? Is it possible that tariffs actually go up some more? And the answer to that is yes, it is possible. How can that happen? Listen to Europe, listen to China. A lot of these places are saying they will respond in kind. They will give time for negotiation, but if that negotiation does not lead into a resolution, they will impose counter tariffs on the US. And we know from Mr. Trump that if that is how it develops, he will come back with more tariffs, right? So you still run the risk of escalation of tariffs. I do think if we go down that route, it's got to be short-lived, because at some stage, clearly it makes zero sense for anybody to go at 60, 70% tariffs on both sides. But so it is a probability that things can get worse before they get better. I don't know how big a probability is, but on the basis, what we expect is that these tariffs at some stage, they will be negotiated down for a variety of reasons. The one thing we know is that if these tariffs stay in place for a prolonged period of time, potentially they can push the US into a recession. I'm really not sure if the Trump administration would want to see the country going into recession just ahead of their midterm elections, right? So, and how do you get out of that? It's difficult. So I'm not sure they would be prepared to go down that route. Also, if we go back to tariffs, the way the Trump administration sees that is a way to get income, right? You put tariffs, you collect that, and if you were to believe that these tariffs stay in place, they could potentially collect as much as $700 billion from these tariffs, which then they would want to put forward towards covering the tax cuts they want to do at the later stage. However, right, you only collect taxes if the products arrive in the US. If the tariffs are very high, those products will never arrive. So there's always a sweet spot. You can put tariffs up to a point, and then you collect all the taxes, all the tariffs, but then at some stage that starts going down again. And that's why I don't think if those tariffs stay in place, they will never collect that money. The actual number would be a lower number, might be 500 billion or whatever. So there's a lot of reasons why we do think sort of at some stage in the future, we see tariffs getting lower, but they're not going to be zero. And in the meantime, there clearly is going to be damage done to the economy. Even if these tariffs get reversed after 3 months, the uncertainty that is creating for the industry is significant. And amongst you, I'm sure the number of entrepreneurs. And if you think, how do you plan? If you're sitting in Canada or Mexico or the US and you interacting either supply lines or customers into this region or in Europe or anywhere, how do you plan? You have no idea what to do. Do you produce and try and send stuff to the US when you don't know the price at the end of it? What do you do? So there will be less investment, there will be less hiring, so there will be some damage to the economy. So under that scenario that tariffs stay, let's say 6 months, and then slowly get coming down, we think the impact on the US economy will be around 1% over the current year. The impact on Europe will be around 0.5%, so we're expecting 1% growth. Most probably that comes out at 0.5%, and maybe a little bit more impact on next year. So even with tariffs starting to come down, there will be some damage. The question, where do we settle? But longer term, I get a lot of questions, is this the end of deglobalization? And the point I want to make is that deglobalization actually started even before Mr. Trump was elected in the first term. And that accelerated, small part because of Trump administration, but also because of COVID. Because during that time, supply lines got disrupted a lot, and a lot of companies realized that maybe they need to bring production closer to home or closer to their consumer markets. So we saw already some of that. But I also don't think it's the end of deglobalization, because companies would always try and make their production as efficient as possible based around the world. So, but also, the first point there is US administration policies. And I think tariffs is just one part of it. And the other parts are also very, very relevant for Europe. And the other ones are basically the message that Europe received on defense. Mr. Trump said to Europe, you know what? You need to take care of yourself. You need to spend more money. I'm not going to come to you when you're not spending money. I spend the money to defend you. So you better take care of yourself. Other messages around, I'm sure you've seen all the leaked messages on Signal. Europe is freeloading, is piggybacking on the US. Europe has to pay. And then we had the approach of Russia directly by Mr. Trump bypassing Europe completely. Remember, Europe contributed 150 billion to support Ukraine during the war, and they were completely bypassed in that discussion. So suddenly, Europe, in my view, is in a crisis. And we know that Europe responds to crisis. It's the only time that responds to crisis. If there's no crisis, we don't do anything. And we've seen it in the past, right? And what encourages me personally is that we've seen, I think, quite concrete steps in Europe to actually do some things. And the biggest one is obviously in Germany. Post-elections, they basically put in place a fund to spend on infrastructure, 500 billion, and potentially another 400 or 500 billion to spend on defense by changing the constitution. That's €1 trillion. That's more than 20% of GDP. It's a big number. It's a big number. And it's going to support German growth in the coming years. But also for me, even more important, is that it's coming from Germany. Remember Germany during the European crisis was all about austerity. Austerity, not spending. Spending is what the US did after the global financial crisis. Europe, it was always about austerity. Who drove that message? Was Germany. And Germany is now spending to come out of the corner. That to me is very positive because it provides cover and sets the scene for the rest of Europe, what we might be doing down the road. And of course, spending is one element for Germany. I think they need to do a lot of other things. They need to introduce reforms. It's an economy that hasn't done anything in terms of reforms for many years, but hopefully we see some of that once the new government is formed. But outside Germany, there's also a number of other interesting developments. UK, France, Germany, they're now talking about collaboration in defense. I don't know how far is this going to go, but that encourages me again, because up until recently, UK was standing alone outside Europe, didn't want anything to do with Europe, and vice versa. Now I see the two of them getting closer together. So I quite easily can see some collaboration in defense, and that quite easily can expand into trade, because both parties know that Brexit was a negative development for both countries. And if you are on the back foot and you feel under pressure, maybe that's the step that makes that step to get closer together again easier. So we could see some developments there as well. But for me, most probably, the one thing that excites me the most, and maybe is not very well founded, but maybe I'm looking for positives, is the message around deregulation. One of the biggest challenges we have in Europe is regulation. It's not surprising. We formed the European Union, the Commission, and Brussels. What was their job? To regulate. So what do? Surprise, surprise, they regulate, right? So, it's not surprising what is happening. I was at a conference with small companies, unlisted companies, 350 of them in Europe 3 weeks ago, talking to some of their CEOs. Their biggest problem, regulation. They set up a company. Before they even produce anything, the regulator comes and says, 1,000 pages of regulation. Before you produce anything, you need to do that, and this color, and that thickness, and that square, and whatever, right? It's just not the right environment to grow innovation, to grow new companies, how you grow to grow the economy. Can we see change there? And the Commission message is they seem to understand that. They know we need to deregulate. They know we need to introduce reforms. Would they have the courage to cut 50% of their people? I don't know. That I'm sure is going to be more difficult. But I do think that it's also going to be pressure from the countries to the Commission for deregulation, given where we are. So it's a lot happening in Europe. I do think that longer term, maybe Mr. Trump is doing Europe a favor, maybe. But we'll see. We'll see. Maybe I'm too hopeful. But I do see some signs there that encourage me. Now, talking about Europe, I want to touch on a couple of other things on the agenda. And this is basically the most interesting one, is Russia-Ukraine. And it's a lot of things going on there as well. By the way, Mr. Trump, the fifth thing he said is he will settle the war in Ukraine in 24 hours. I think we most probably passed the 24 hours. But anyway, I do think that at some stage we will get a ceasefire in Ukraine, potentially in the current year. I know it's difficult, and it's very difficult to see it right now. But I think if the US wants to have ceasefire in Ukraine, they will enforce that. But I find it very difficult to see an agreement. Maybe because I've got the experience of Cyprus. Would somebody sign off and say it's okay for us as a government of Ukraine to give Russia 20% of our grounds, of our soil? I don't think so. Without even any security guarantees. And they're not going to get the security guarantees. From Russia's perspective, they don't want ceasefire, they don't want that agreement because they continue to gain ground. But if they can get a relief on sanctions and some sort of acknowledgement that whatever they got, they will keep, even if it's not formal, they will take that. And they can always come back again for more if they want to, if there are no security guarantees. But for Europe, it's an important development, right? Because sentiment-wise, I think that could be positive. In terms of energy prices, I do believe that we're going to see more gas coming back to Europe. I don't think we ever got to go back to where Europe was hooked on Russian gas, but there is a scope to increase imports through pipeline, because remember, already Europe buys quite a lot of LNG from Russia. So it's not as though we're not buying gas, we're just buying more expensive. So if there's a potential to bring it through a pipeline, I think that would be positive. And so cheaper energy, most probably better sentiment, reconstruction. If there is reconstruction, maybe some of the contracts come to Europe, although I think a lot of them will go to the US, but I still think some European companies will benefit. And the last point, going back to what I said earlier on, Europe spending 150 billion to help Ukraine. Even if they continue to assist Ukraine, maybe some of that money stays within Europe. So again, from an economic point of view, that will be a positive development on Europe. But I want to go back to the US again, because I talked about the sequencing of Trump policies. And they started with tariffs, with immigration. He talked about sending a lot of immigrants back home, and he's done some high-profile things. But in terms of actual sending people back home, he has not even done as much as Obama. But now, nobody wants to go to the US anyway. They're so scared, so immigration dried up. So in effect, he's already achieved his aim of basically bringing immigration down. And the next step, and I think that will come quickly, is tax cuts. And that's clearly positive for the US economy. So down the line, that could support a recovery in the US economy. And then the other aspect is obviously deregulation that would also be supportive for the US economy. I want to touch on China for a minute as well. About China, but also the role of China in the global landscape. So clearly for China, the tariffs that we heard last night are quite punitive, could potentially cost China as much as 2% on GDP, but China has the firepower to do some fiscal spending, so the net impact, I don't know, might be a 1% negative, but we expected some of that anyway. But similar to Europe, I think China is also under a lot of pressure, and they know they need to take care of themselves. They can no longer get access to US technology, so they have to keep growing their own homegrown technology. There will be even more pressure on them. They will spend even more time, more money. And that's why I think longer term, potentially China can also benefit from this crisis. Who could be the loser longer term? Potentially the US? I don't know, but it's something to think about. And also for Europe, China in the past was like If US said we do something, Europe will go along and said, yeah, we put sanctions on China, we put tariffs on China. How would the European politicians, I don't know, look at China in the future? Is that an enemy, or is it somebody that you can partner up opportunistically, right? Maybe do some things together, maybe trade together. So I think the world is changing quite a lot. And I'm sure there will be time, by the way, to discuss more, go into more depth and with our discussion later on. But I just want to finish with how do we invest in this environment? Because that's basically my job day in, day out. Thinking about how do we protect our clients' portfolios. And the golden rule of investing when you face with this sort of uncertainty is diversification. Diversification. Diversification across asset classes, diversification across regions. That's one of the best ways to navigate volatility. And the other thing, from my experience, a lot of people, when they see these things happening, markets collapsing, what they do, they sell, they sit on cash. History would tell us that's one of the biggest mistakes one can make. Because it's easier to sell, it's much more difficult to re-enter the market. And I know the discussions I had with my clients back in COVID, when the market collapsed, and the market started rallying, and but it's doom and gloom, everybody's dying. Why? Why is the market going up? We don't even have a vaccine. That's not the way the market is thinking. The market would bottom when the market thinks they know the worst case scenario, because then it's all upside. You can quantify your downside risk. If you can do that, then it's a lot easier to invest. And the market would always rally well ahead of any signs of recovery. And that's where I think is the biggest challenge for even professional investors to re-enter the market. So staying invested longer term is a strategy that always pays. Other ways to diversify the portfolio, we like gold. We like gold fundamentally because there's strong demand from emerging market central banks, from ETFs. It's a good diversifier when you have political risk, and that's a good sort of thing to have. And finally, if we do end up having tariffs staying for longer than we think, and US goes into recession, maybe even Europe goes into recession, one way to protect the portfolio is by having high quality bonds, investment grade, high grade bonds, because those is the asset class that will definitely rally and protect the portfolio in a downside risk. But I think I'll stop there, and hopefully we pick up some of these topics in the panel discussion with Sofroni, and any questions from you guys. Sofroni?
Okay, that was a breathtaking speech, if I've ever heard one. I was told you were a good speaker, but that was quite impressive. So the idea we'll have a little discussion here, and then we'll open the floor to questions. So let me start with one question. So one thing we found out today, I mean, President Trump has been using tariffs over the last 2 months as a weapon to achieve all sorts of things. But this time it seems that there was actually a calculation behind these tariffs, which was to try and balance trade individually with each country. That's how we figured out today, some people figured out that that was actually the calculation that was made, that was behind these numbers. So the question is that his end game? Is that what is he really trying to balance trade between the US and every country individually? Is that what he's trying to do? And then the second question is, it relates to something what you said. If the point is to reduce imports by that much, how is he going to achieve the increase in income, in revenue through tariffs? It doesn't seem to add up, right?
Yeah. I mean, we have to remember that nothing happens in the short term. Right? If you impose tariffs on cars, and the cars don't arrive in the US industry cannot produce the cars from one day to the next. You need to build factories, and it takes time. So rebalancing trade is not that something that happens shorter term. What he's obviously trying to encourage is companies to move production to the US. And he's very open about that. He said it at the release last night. He's always saying, you know, if you produce in the US, you get zero taxation. So why, if you are a car company in South Korea, Hyundai or Volkswagen or Porsche, why don't you put your factories in the US? Yeah, easy thing to say. The companies, some of them would do that, right? If they have a big market in the US and they think they're going to lose that market over time, then they most probably put factories on the ground. But any entrepreneur would tell you that you don't make decisions over 1 year or 2 years. Trump is here today. We don't know what happens in 4 years' time. We don't know the US policy. So companies in general, they will be very reluctant to make very big decisions for over short-term developments. And these tariffs, they, I don't know, 31% or whatever, maybe tomorrow is 15%. So the dynamics would change quite a lot. But what would, so you're right, some of it is encourage companies to move production to the US. He's trying to raise some money to pay for the tax cuts. And then again, he's trying to get that sweet spot right, where you're still getting the money and you still getting the products coming in. And by the way, if you're trying to find consistency in the policies, there's no consistency, right? We have to be, you know, Mr. Trump wants the economy to grow. He wants lower interest rates. He wants weaker dollar. He wants more oil production. But he imposes tariffs, which clearly is going to result in weakened economic growth and potentially inflation going up. By the way, I didn't mention it. I did mention that inflation will go up in the US if all these tariffs go through. Would add about 2% to the US inflation. Core inflation, that's quite a big, meaningful number. How would the central banks react, which is the other big question? Would the Fed look at that and say, well, inflation is going up, so we've got to increase interest rates? Or would they say, well, we're worried about the economy going into recession, so we cut interest rates? I do think they would prioritize the economy in the shorter term rather than inflation, but there's a lot of dynamics happening there.
And they will also probably be under pressure from Trump to not increase interest rates or even lower them, right? Because that's what he wants. So it's going to be a tough spot for the Fed.
Yeah, exactly. But I do think, I mean, the Fed is, by the way, independent, because a lot of people ask whether they are independent. I think they are independent. And if anything, they would take the opportunity to show they are independent. But for them, it's also a bit the sequencing, because the first thing that will happen is we've got to see the weakness in the market. And we're already seeing that. In the numbers coming out of the US, we're seeing confidence coming down, consumer confidence, business confidence coming down, and we're starting to see impact on the real economy. So the first thing you've got to see is the weakness in the economy, and then you most probably start seeing inflation picking up. So balancing act, I do think they will have to cut, but they will be patient later on. Once the inflation starts coming down, they could cut a couple of times, pause, see what happens with inflation, and then maybe next year they cut again.
So I have a question about this manufacturing and the effort to bring manufacturing back in the US, which even if it is successful, which it's a big if, but even if it is, the other issue is that, I mean, it's one thing to bring manufacturing back, it's another thing to bring manufacturing jobs back. And the reason is that because a lot of manufacturing is becoming more and more, it's going to be done by robots. So you could bring car factories back in the US, but it's not going to produce a lot of manufacturing jobs, which is really, I think, what he's trying to do, right? So that's going to be
absolutely spot on. And that's why when we talked about deglobalization, we said one of the, if you think about themes, how to invest or whatever, you can think about robotics, because if you want to bring manufacturing back to Europe or back to the US, one of the biggest challenges for companies, and the reason they put manufacturing in places like China or Vietnam, is low labor costs, right? So if you bring it back home and you're paying German wages, most probably won't make that much sense. So you try and automate and you introduce more robots. And obviously, they are the companies that produce the robots. So that's the opportunity rather than the manufacturing jobs. There will be some manufacturing jobs, but clearly it's not like what it was 20 years, 30 years ago. So you can't compare.
Yeah. So let's move to Europe. So this is a big challenge for Europe. As you said, Europe is in crisis. So how do you think should Europe should and how will it respond to these tariffs? Two different questions.
I think, well, I mean, I just go by what they said, right? They said they will impose, they have a number of instruments. I mean, they can't, if they want to go size-wise, because the aim for the European Union is to impose tariffs, the equivalent of what the US is imposing in terms of income, right? Receipt. And they don't have enough good exports from the US to Europe to collect that amount of money. So they have to complement that by taxes on services companies. Because obviously, Mr. Trump doesn't talk about services because they have a big surplus of services with Europe, right? And this is where Europe will go, I think, to collect the additional tariffs. Now, they can go a lot more aggressive, and they can revoke licenses of companies to operate in Europe or whatever, but that's what I call the nuclear option. I don't think they're going to go there.
Yeah. No, it's interesting that, there's, like you said, there's this focus on trade in goods and kind of conveniently ignoring the trade in services where the US has a big surplus. So maybe taxes on Google and Facebook and Netflix, and that might be the tariffs on those might be the coming soon. So one other, back to Europe, and some, Europe we have been, even before all this happened, we have been having a lot of discussions in Europe about competitiveness and the Draghi report and so forth.
Yeah.
And this just comes to add to the whole discussion. And I mean, Europe is behind technologically, and it also has a big demographic challenge, I think, which is not discussed as much as it should because it's very politically very sensitive. Mm-hmm. So, and then on top of that, of all this, we have now the tariffs. So, how do you think? What do you think? I know you mentioned a few things, but what do you think Europe can do to overcome this?
It's a lot that Europe can do, is whether they want to do it, right? That's the problem with Europe. And the problem with Europe is not that the countries cannot see the benefits of doing certain things. It's just we have 27 countries with their own national interest, which is not always the same. How do you get countries to agree on something? Take Germany. If you were to spend a lot of money, do you spend it on AI or do you spend it on the auto industry? Up until recently, they would rather support the auto industry because that's their core industry, that's where the employment is, rather than say, well, actually, that's a dying industry for us, maybe we need to spend it on technology. That change doesn't just happen, especially without a crisis. And I do think, and that's why I'm a little bit more hopeful. I mean, deregulation, I talked a lot about, because I think it's a big challenge, about spending. I mean, we have the European Union, but we only collaborate in parts of it, right? Defense is all fragmented, right? And can we bring it all together, standardize it, so we can spend on common defense, procurement, development of arms, all of that stuff. But it needs the willingness, because France then suddenly has to share with Germany. And the two countries never wanted to share military expertise, let alone France and the UK, even further apart. But am I seeing the willingness of getting closer together? Yes. How far is that going to go? I don't know. But that's where you need that push. And going back to demographics, clearly we know Europe has a problem. And Europe is not alone. Chinese population is also shrinking. So
Japan, Korea.
Japan has been shrinking for a long time. Korea, South Korea, big issue. So what is the answer? Productivity improvement. Productivity improvement. How is that going to happen? With more technology. And that's why we need to spend more on technology and develop technology and deregulate, because deregulation adds to that, inflexibility of the economy.
Yeah. So, we always say Europe this, Europe that, but then we forget that it's 27 countries, plus another 15 or so countries that are not in the European Union, but are also part of Europe, and it's very difficult for these countries to make decisions, and we have to find, I think, a way to move past that. But I think it probably is, I think what you said, it's a good thing that the UK is, this situation is for kind of bringing the UK closer to Europe, and maybe that's one thing that gives a little hope. So before we move, so let's just say another word about China, which is obviously, so it seems that Trump really, his worldview is that China is going to be his the big competitor, and he's trying to position himself, the United States, to be able to compete with China. He's concerned about Chinese technology, and he seems to kind of ignore Europe essentially. I mean, it's striking to look at the disdain with which the Trump administration looks at Europe. You mentioned the messages on Signal, and I mean even how he himself talks about Europe. So how can Europe position itself in this new bipolar world between the US and China?
Multipolar, actually. I think we're going into a multipolar world, not a bipolar world, because clearly, if we follow the logic of what we were saying earlier on, then Europe needs to develop its own identity. And then you've got Europe, China, you've got the US, and then maybe other complexes come together as a result of the pressure they're feeling from the... Could it be that the BRICS countries get closer together again, form another bloc? So it could be that we see the development of new alliances in this new world. And then there is a question how they interface with each other. What is the relationship between Europe and China, Europe and the US, China and the US? And it's true that the Trump administration in some ways respects China more than it respects Europe. And it's because of our past, right? We never had strong leadership. We never put our foot up or down. And I do think that there is some of that as well. Now, but you said something else that I want to come back to, because you said Mr. Trump sees China as a big competitor just generally, and they want to weaken it. Actually, I sense a little bit of difference in the way the previous administration looked at China, the way Mr. Trump is looking at China. I think actually Biden was much more aggressive against China than Trump is, because he did a lot more than Trump did in the first term to limit China technologically, trade, sanctions, everything else. And up until last night, I was listening to the rhetoric that coming out of Trump. It was more like, we want to impose tariffs, and then we want to reach a deal with them. That's much more narrow. It's not the view that China is a political competitor, technological competitor, military competitor, which is, I think, what the Biden administration looked at China. So to me, it sounded that the Trump administration was moving actually in a direction that would have been less negative for China. Because if it's all about trade, you reach a deal, you're okay, right? And you move on. But last night, the tariffs were pretty harsh for China. So it may be, and also we know that this administration is no issue. I mean, they would say this today, and tomorrow they might come back with additional tariffs. So I don't know. But I have to say, up until recently, I was wondering how is that relationship got to develop?
No, it's true that this started in the Biden administration,
Yeah.
this change in the policy. So maybe we should open the floor to so people can ask questions. We have. I first saw the hand up there.
Is there a mic?
In the face of a problem, by doing that, diversifying, don't you accelerate the existing problems?
The second part of the discussion is about diversification and the impact on?
And in the face of a problem, you diversify. Don't you accelerate this problem you're trying to face?
Not really, because The thing with diversification is people tend to feel a lot more comfortable with what they know, and they stay close to home. And I always bring the example of Greece. There was a period that Greece was doing extremely well. So what did everybody do in Greece? Invested in Greek assets, in Greek companies, in Greek real estate, and then the market collapsed. And I always bring that as an example because I said, if you invested in Greece at the top of the market, it would take you 30 years of the market growing 5% per annum before you make your money back, right? And by diversification, you actually at least spread your risks. And it's not only geographic, but also across asset classes. And that you can always see, if you can pick any asset class and you look at how well they did over different years, every year there will be a different asset class that will be the top performer, right? And there will be a different asset class that will be at the bottom of the chart. So if you so happen to put everything what did well last year, maybe next year you are at the bottom of the chart. By diversification, you remove a lot of that volatility. And also, I think, just to make it even more narrow, think if you invest in a single company can go bust. If you invest in 30 companies, the probability of 30 companies going bust is close to zero, right? And that is the benefit of diversification. And I have to say, I apologize, but I'm not sure I got your first question.
On banking.
On banking, yeah, and?
The impact of
this on banking. So clearly the banks are exposed to the economy. There's a direct correlation of things like demand for credit. So that would be negative for earnings for companies. Interest rates most probably come down more than previously expected, especially here in Europe. Well, we expected interest rates in Europe to come down to 2%. We think now maybe 1.75, so 25%, 25 basis points less. And that again impacts net interest income for banks. But it's just banks won't be just alone in that. When the economy is weak, impacts everybody, including the banking sector.
Okay. Yannis.
Thank you. All right, my question is about Europe, and I'm a bit fearful, and I worry for the following reasons. One is that it seems that the only country with space to spend and expand fiscal spending is Germany, and nobody else. So if you have the pressure to spend money on defense, and your defense is not there, you cannot produce, you could either postpone the spending or import from the United States, right? So this defense idea at the beginning can lead to more deficits in the current account and all the rest of it. Yep. Then you have the problem of the high debts. It's a very heterogeneous union, the European Union. High debt in many countries, low debt elsewhere. How do you manage monetary policy and avoid a crisis in debt markets going forward with all these changes happening in the economy?
Very good question about the debt challenges in Europe, and also where do you spend your money if you want to spend today. And absolutely right. I think the initial spending will be on a couple of areas. Supporting local defense industry to expand capacity. I mean, if you take some of the German defense companies, or at least one of them, they might not have capacity to produce more, but they can use spare capacity of the automotive industry, right? You can repurpose it to build military vehicles or whatever you need to spend. I think the way Europe is going to approach defense spending to start with is going to be on areas like cyber, drones. So it's the new way of fighting a war. And those don't need the lead time you're going to need to build a new aircraft. And ironically, what I see from Germany, from Canada as well, is the opposite, because both countries have orders in the US for F-35s, and both countries said they would review those contracts. For Germany, that's worth $8.5 billion. For Canada, it's $13.5 billion. So it might be that they decide to withdraw or buy less and spend some money on Eurofighter. Eurofighter production, because they wanted to keep the production going, they've been exporting to places like Saudi Arabia. So why wouldn't those Eurofighters end up in Europe rather than being exported? So there is a capacity to spend, even in the short term. But I think what the European Union wants to do, and Germany wants to do, is to develop a homegrown defense industry. And one thing I haven't mentioned earlier on, a lot of the innovation we have today actually came from military. So the more military spending there is, maybe we get also more technology developments in Europe. So that's the side benefit of spending on defense. On indebtedness, you're absolutely right. When the European Union says if you spend on defense, it can be excluded from the fiscal rules, it doesn't mean that France can spend more money. They can't. It doesn't mean that Italy would be spending more money. In my opinion, Greece shouldn't be spending more money. To increase Greece, Italy, France, they need to bring the level of debt down. Otherwise, the debt markets will have something to say. Less so for Greece because they don't have outstanding debt that much in the short term. But clearly, the other countries have a problem. But the rest of Europe, where there's headroom, they have the potential to spend more. And again, it would be interesting because when you look at Germany, people say, oh, but German debt to GDP is going to go out quite a lot. We have to remember how the US got out of the financial crisis by spending. Spending, growing the economy, you grow your income, the debt to GDP doesn't need to go up. It might even go down if you are successful and you spend it the right way.
We'll take a question from our students. Christos?
Hello. Two questions. One is, can you even individually balance trade? For example, a lot of times countries try to tax or tariff some imports, and what happens, like Russia, for example, sells in China, and then China sells to Europe, for example. So maybe you can introduce a universal tariff so you can avoid this happening, but what would happen is probably like China would export, I don't know, to Mexico that has, I don't know, 10% tax, and then just pay 10% tax instead of 35%. And the other question is if tax cuts can even happen in the USA right now, because they have a very high debt to GDP ratio, and also even, I think Moody's told them that they will degrade their ranking if they continue to increase their debt. So, and they are already borrowing at 4% and over 4%. They can't roll over the debt for too long.
They pay more than Cyprus.
Yeah, that's right. But two very good questions. To answer your first one, I think that's taken care of with existing tariffs. So rerouting of exports is not going to happen because they would look at the rule of origin, where is the materials coming from, and that will be captured by the country, exporting countries. But there is another angle to it. If China cannot export to the US, would they export to Europe? That is the other sort of question I get. And there I think all the countries, including Europe, will put up some barriers so there's no anti-dumping to make sure there's no dumping in the individual markets where they're basically competing with local products. But the first one is taken care of, rule of origin already, and the second one, obviously there will be some barriers built to make sure there's not sort of the product ends somewhere else. And then the second question about the US and level of debt and the deficit, that's exactly they want to raise the money to finance the tax cuts through the tariffs. If they don't raise the money, then it will be difficult to finance the tax cuts, and then they will have a problem. But also I think it's a political angle to it as well, because you could argue they should be using what they raise from tariffs to bring down the deficit and bring down the level of debt rather than spending on tax cuts. And that's where we have a lot of politicians in the room. Sometimes the term would dictate whether Mr. Trump will care what happens after 4 years. So I don't know.
The back? No, sorry, more back. The back one doesn't work?
Maybe another one. It's easier to hear.
Can you hear me? For several years, we have been hearing there is an upcoming financial crisis This is one thing, which is around the corner. Also, the one who is managing the federal bank interest is US. The other thing is Trump is a businessman. So am I expecting that there are attempts to push this bubble financial crisis, which we are expecting? It was mentioned that it was supposed to be 2019 and then 20 and then 21, then 23, then 25, then 26. Is he trying to do all these things to push this financial bubble crisis? I'm interested to hear from you.
No and no. I have to say, first time I hear that we're expecting financial crisis, we don't think there'll be a financial crisis. I think the financial institutions today are a lot stronger than they were whatever number of years ago, back to 2008. The regulator made sure there's plenty of capital for financial institutions across the world, including Cyprus, by the way, and Greece, where we had a problem, and the UK, and the US. So I don't expect a financial crisis. We can have an economic crisis, but I don't think we'll have a financial crisis. And if you think about the area that sort of causes systemic risk to the economy, the financial sector is the most important. And I do think it's a very strong sector, so I don't expect financial crisis. Mr. Trump triggering a financial crisis will have nothing to gain from. He cares about his popularity. He cares about the growth of the US economy, and that's why I do think at some stage we're going to see a reversal of what he's doing. And he cares about his own popularity. And I don't think a financial crisis will make him popular, and I don't think he wants that to be his legacy. So I don't think so.
Thank you. Okay. Andreas, and then we'll go to Marius.
Thank you for a really enlightening speech. Going back to Europe, which we care most about, there seems to be, as you mentioned, Europe is trying to find its identity, right? And there seem to be a lot more violations of the rule of law.
Yeah.
And we feel this weakness. We see lack of leadership. How do you think can Europe bounce back and take advantage of this, as you said, an opportunity and a wake-up call, perhaps, that we see now?
For me, it's the sense of crisis. Is Europe getting a sense of crisis or not? If they don't sense a sense of crisis, nothing will happen. And I can tell you, I live in the UK. And when Mr. Starmer was elected Prime Minister, people thought he was most probably not the most charismatic leader, right? Yet, when these things started happening with defense and everything else, suddenly we saw a new side of the UK Prime Minister. Even Macron, that was basically considered weakened at home and no longer be able to lead, he suddenly stood up and shone. Before the elections, and I talked to colleagues that live in Germany, and I was saying, what about the new leader of CDU? I said, don't expect much from him. He's a solid guy, but don't expect much from him. What did we get out of Mr. Metz? A significant change. So sometimes the crisis is what brings leaders out, and that's what I'm hoping. And if you look at Europe in the past, Europe used to operate by France, Germany, and the ECB, and occasionally maybe either Italy or Spain, getting together in a room and discussing what needed to be done. They would agree, and they go to the rest of Europe and say, guys, this is the way we got to go. And that's what we've been lacking for a long time. And maybe this sense of crisis will wake us up, and maybe the leadership will come out and work together and lead to a better Europe. The rule of law is a worrying aspect globally, and we see it in many countries, and that is worrying. But hopefully it's transitional, and hopefully the population, because at the end of the day, those are elected leaders, right? They didn't take government by force. There wasn't a military coup. People elected them. So these people that elected these leaders, maybe in the future make different decisions.
Yes.
You count a lot of deregulation. Back 44 years ago, America started the banking deregulation, and then 99, I think it was when Alan Greenspan and Clinton cancelled, revoked the Glass-Steagall Act, and we had all this problem in 2008. You said if we have deregulation, maybe, yeah, it's going to save business a lot of money, heck of a lot of money. But what if we enter into problems like we had in the banking in America in the 80s with the SNL disaster and then the Lehman Brothers disaster?
Yeah, absolutely. It's a fair.
Close to home.
Sorry. Yes. No, it's a fair question, right? But I think we have to think where we're starting, the starting point. I think we're far, far, far away from deregulating so much to create an issue. Even if we remove 10% of existing regulation, it's a big win. And believe me, we still got to be very safe. The starting point is so extreme. Why do we need to impose double the number of regulations than the US? Whatever. I mean, it's so much more restrictive. We don't need to go even to the level of the US. If we go halfway, we make a lot of progress. So it's the starting point and how far we go.
How about Cyprus?
Cyprus.
Where does
I have to
Cyprus stand
say,
here?
I was reading, I don't know if you've seen the IMF. IMF was in Cyprus a couple of weeks ago, and they just published their notes afterwards, and they described the Cyprus economy as a nimble economy. I like that description, nimble economy. And I think that's a good description of the Cyprus economy. It's a small, very flexible economy. And that has a lot of advantages. And what I enjoy being a Cypriot living abroad is when I see our government coming to London and inviting all the financial people in a room and all the businesses and say, please come to Cyprus. Please come to Cyprus. We want to help you build business in Cyprus, create a financial center in Cyprus, and we'll offer you incentives. And it's business. It's like a business, right? And that's very, very exciting. But it's a small economy. And being an open economy, you're very exposed to what happens everywhere. And I was amazed the progress that Cyprus made on bringing down the level of debt from more than 100% down to whatever, 65%, hopefully going below 60%. What I'm hoping is that the Cyprus government continues to be disciplined, because if we can bring the level of debt well below 60%, gives us a lot of cushion if there is a crisis again. Because I know once we have money in the bank, we want to spend it. And there's always pressure on the government. If you're making money, why don't you give it to people, right? But let's create some cushion, enough cushion, so when the crisis will come, which will come one day, then we have that cushion to take us through it.
Politicians won't let us do that.
I have a question about European Union and how you see things today, just to pick your brain. Thank you very much for a very interesting lecture. I wanted to understand how you think the European Union will respond as a union towards the US. If you think that some members will consider the challenges and think, maybe I should also leave, and also whether the UK will continue to work with the European Union, or whether they will find a chance to cut a deal with the US and stick to their guns about not being connected to the
I think it's a good question. You have to think about, if you were not a member of the European Union, if you are Italy, and you are not a member of the European Union, what would be your leverage to bring tariffs down if the US came and said 40% tariffs? Because you export our money suits to the US and we don't like that, and why don't we have local suits made? You have zero leverage, right? But as a member of the European Union, you have a lot of leverage. It's a big market. It is a big market. And American companies are doing a lot of business in Europe. If the European Union went after the technology companies, these CEOs have the ear of Trump. Maybe they whisper something, right? So I think you have a lot more power as being part of the European Union rather than outside the European Union. And hopefully, countries can see that. And again, we have to remember, we're talking about what happened in the last 2 weeks, and we don't know what's going to happen in 3 months' time. So things could be completely different. And we have to remember, this is a long-lasting decision. Look at the UK. I think if you ask people honestly, they know Brexit was a big negative, a silly thing to do. But it's very, very difficult to get back into the European Union after you broke the relationship. It might happen, but it would take a long time. And I think the UK, everybody understands the damage done. And if there's a way for the UK to get closer to Europe, so 50% of UK exports go to Europe. US might be 20%. So who is more important? I would argue Europe is more important. So they need to keep an eye on Europe. And that's why it makes so much sense to be a lot closer to Europe. They wouldn't want to antagonize Trump for sure, but they know they also don't want to create a lot of animosity with Europe.
There are a lot of analysts who argue that Russia's economy is likely to implode in about a year if it continues the war. Now, if it actually implodes, if it continues, if there is no ceasefire and there is actually an implosion, what do you think? Will there be an impact on the rest of the world? This is connected with the idea that if we see how the West has helped Ukraine, it has helped it just enough not to lose, but never as much as it needed to actually win. Exactly for the fear of what will happen if the elites in Russia fall as they are, or if Russia disintegrates. Do you think that there will be an impact in Europe, or is Europe by now insulated from what is happening in Russia?
So first of all, I don't think Russian economy would implode if the war goes for another year. Actually, the Russian economy is not close to collapse. They're not doing great, but they're not doing too badly either. If you wanted to put pressure on the Russian economy, you cut oil supply, you cut exports of oil. That would be super painful. And that's why when Mr. Trump had a moment of getting annoyed with Mr. Putin, he said he wants to impose secondary oil tariffs, and that would have done a fair amount of damage. But I think Russia can keep going for a while before the economy collapses. And also, it takes North Korea. The economy was in a disaster situation for many years, but the government never changed, right? So it's a completely, it's not a real democracy. Let's be honest about it, right? So, but the impact on Europe is also minimal these days, because as a result of sanctions, the links between Europe and Russia are minimal, the trade and everything else. So I don't think so.
There was a hand there.
Hello. Let's bring this discussion to today. So what did you do? Did you buy, rebalance, stay put?
Sorry? Investments.
Yes. So we talk about the future a lot.
Yeah.
But what happens today? Do we buy, rebalance, stay put?
So what I would do is look at there's no, by the way, in investing, everything is an individual, right? So there's no such a thing as general sort of, everybody has a different risk appetite, everybody has a different needs. I don't go into the rules of investing about thinking why you invest, what you want to do with your money and everything else. But anyway, talk to my colleagues in the client advisors, they will give you a lot of advice on that. But I would, if I want to have a balanced portfolio, then I would look, where am I versus that portfolio? Do I have gaps? A lot of people invested heavily in the US over the last few years. They were very underinvested in Europe. If that's where I am, maybe I build up my position to get to a balanced portfolio. If I have a lot of little exposure to the US, maybe I build up exposure to balance my portfolio. But as I said, this is not individual advice. I'm just saying, what would I do in my portfolio if I want to have a balanced portfolio? That's how I would look at it today. And by the way, again, the other thing in investing, if you don't do anything, you're doing something. It's an active. And a lot of people think, if I don't do anything, I don't do anything. No, you're doing something. You're not doing anything, right?
All right, we should probably are getting close to the end. Is there a gentleman up there who wants to go for a second round? Is there anybody who hasn't asked a question, who wants to ask a question? All right, we have Ravit, right?
And Ravit also. Do you have a mic?
Yeah.
Affecting whether the tensions or in general, you know, oil,
yeah.
The pressure from there, I mean, how is that affecting where we are?
Of course. Today? Thanks for bringing that up, because that was something I wanted to cover and I didn't cover earlier on. I mean, clearly it's sad that what's still going on in Middle East. Hopefully there will be peace also close to us, right? It's just we're neighbors. And again, I'm hopeful that we'll find some solution there and we have some sort of ceasefire and, again, agreement. I think is very difficult to find, but at least we stop the fighting and the killing of people. From an economic point of view, obviously, that's not, it's not going to have a huge impact, because if you think, we always, when we look at what's happening around us, one of the biggest challenges we have is always a lot of noise. A lot of things are happening every day. And then you have to sort of work through the noise and see what is relevant for the economy. And Middle East, if there is a transition mechanism to the real economy, is through oil. So if we have a disruption in oil supplies, that is going to have an impact on the economy. Can that happen? Yes. I mean, it will be interesting because Mr. Trump is threatening Iran with bombing their facilities. If that were to happen, if that then escalates, we could see maybe Iran blocking the Strait of Hormuz and then the flow of oil and whatever. Probability of that, in my opinion, is very low. It's not zero, but it's very low. And again, in some ways, it's sad that we're not talking about Middle East conflict anymore. It's just gone to the back of the news. But it's still going on, and it can escalate again. And that would take people by surprise, I think, if we have re-escalation of what's happening there. But again, for the economy, the transmission mechanism is through oil, and I think probability is low.
So maybe we should call it a day.
Sure.
I think so.
We can also talk afterwards.
Yeah,
on the
so
drinks.
We'll continue afterwards. Can I ask you a question afterwards? So let me just wrap up. And obviously, it's a brave new world. Things are changing by the day, it seems, and there's a lot of uncertainty. It's a tough time to be making decisions for the long run. Hopefully, we are a bit wiser after this hour and a half. I would like to thank our speaker, Dr. Themistocleous, for being here, spending some time with us. Thank you also to the Cyprus-Swiss Business Circle and Kyriakos Metaxaos, who did most of the work for this. Thank you, Kyriakos. The ambassador for the support. Our sponsors were listed up there, and thank you all for coming. Please join us outside for some drinks and
thanks
snacks.
for hosting me. Thank you.